I'm Nick Hodge. I'm the founder of Outsider Club. I've been following and investing in gold mining for a number of years now, since it was called Brazil Resources, in fact. And so when I saw the press release last week that David Garofalo was coming on to head up the Gold Royalty Corp that they recently announced as a wholly owned subsidiary of gold mining, I jumped at the chance to connect face to face with David Garofalo, who, of course, is the former CEO of Gold Corp, which merged with Newmont last year to create the world's largest gold mining company. So, David, it's a pleasure to have you on and speak to you face to face.
Well, thanks, Nick. It's a pleasure to be here.
I did just a tiny brief bio there that doesn't do it any justice at all. Before I ask you about your current endeavor, could you just bring everyone up to speed on your past endeavors, please?
Sure. I've been in the mining business for 30 years now. Started my career with a base metal company called Inmet Mining, which was taken over by First Quantum about 6-7 years ago. Spent 12 years as the CFO of Agnico Eagle Mines Limited, AEM on the New York Stock Exchange. And we grew that company from 100 million market cap to 10 billion market cap by the time I left. Went to join Hudbay as CEO. Spent 6 years there, built 3 mines while I was there, and then joined Gold Corp as CEO, where I was in that seat for a little over 3 years before we consummated the merger with Newmont.
You've put several more projects than that into production, in fact, and I've got to think from your seat in the gold space, you have a pretty good macro overview and a pretty good take on what's going on. We're sitting here seemingly firmly above $2,000 an ounce. You said when you joined Gold Royalty Company that it was a good environment to do so. What makes you think that it's a good environment besides $2,000 gold, of course? And then where do you see the future?
Well, I've seen positive gold cycles before, but nothing like this. This is unprecedented because what we haven't seen before is this global coordinated quantitative easing that's occurring across the industrialized world. So every central bank is competing to debase their currencies for a couple of reasons. One is to preserve their export markets, but the other is given the lack of economic activity because of COVID and the anemic growth that we experienced globally before that, they're having to print their way out of debt. So they're piling on substantial amounts of debt to stimulate the economies. And in order to do that sustainably, they're going to have to devalue that debt by just printing more paper currency. Well, gold is the one currency that can't be printed. There's a finite quantity of it. 200,000 tons of gold has been produced since the beginning of time. And that, to give you a visual, would be about 4 Olympic-sized swimming pools. It's a very, very small quantum of gold. So this herd of elephants that we're seeing stampeding the gold is trying to go through a keyhole. And so you can imagine the kind of torque that delivers in the gold price. And we're starting to see that. We're just starting, in my view. And I don't think anybody foresees a curtailment of this quantitative easing for the foreseeable future. Nobody knows how the COVID crisis is going to unfold. But these debt levels cannot be sustained without, again, devaluing this debt and delivering substantial inflation. And gold is an accurate barometer of that.
The debt and the money printing, of course, have been sort of ongoing since 2008, let's call it. But really what's been interesting is how this pandemic has sort of exposed really what was going on and made them do it so much more now that everyone else realizes, not just two guys talking about gold over an app. Many more people realize, including banks now, where you see whatever Bank of America go to a $3,000 target, or Goldman now saying that gold's going to be at $2,300. So I'm firmly in alignment with you there. And I have to ask you about gold mining and the team, because as I said, I've been involved with that story for a little while now. And I could pick any number of Amir quotes, whether that's, buying your Christmas lights in July or whatever it is. But basically, it's a contrarian way of thinking about gold to buy assets on the cheap during the bear market that took place over the past, call it whatever you want, 7 or 8 years. And I heard you speak to that sort of contrarian nature. And so is that one of the things that brought you to gold mining and gold royalty?
Yeah, absolutely. I mean, philosophically, I've spent my entire career building mines. Even though I'm a financial person by background, I learned at a very early age. The fundamentals of the business, got involved in early stage construction of many mines, over a dozen in my career. And that's where all the value is created. It's buying something that's underappreciated in the market, off cycle, and then de-risking it systematically. And delivering value to shareholders that way. And what Amir is trying to do with GoldMining, it makes a lot of sense. Accumulate those ounces early, build a substantial war chest of ounces, 25 million ounces, in a market that's starved for growth. Reserves in this industry have gone down by 50%. Gold reserves in the ground for producers have gone down 50% over the last 7 years. So they haven't, as an industry, done a tremendously good job of recycling that capital back into the ground to replace what they're depleting every day. They're dying a bit every day. And that's because the focus, rightfully, I think, was returning capital to shareholders, particularly after the debacle the industry went through 10 years ago when cost structures inflated dramatically and they saw their margins erode. Investors demanded returns of capital, discipline, running these things like real businesses. But what they sacrificed in doing that was exploration. And so now, if you're not finding it, you have to buy it, or you have to buy into it. And what we have in GoldMining, again, what Amir has built up is a portfolio of 14 different projects that make up those 25 million ounces, and they're of various shapes and sizes, and so they can be fit for purpose for different scales of companies. It's not all concentrated in one asset that might have a significant multi-billion-dollar ticket to bring into production. There are various shapes and sizes of assets that fit senior companies, mid-tier companies, and emerging producers. And that opens up a very diverse portfolio that can be value maximized through the de-risking and stage gating process over a number of years.
Well, he's got a lot of ounces to work with, something like 25 million ounces indicated and inferred across his global asset base, which we know is in multiple projects in multiple jurisdictions. And you hit on something there. Well, a couple of things that are important. One, it's been an exploration bear market. All these explorers I follow and prospect generators, they couldn't get any capital to explore. They couldn't bring any JV partners because nobody was, the majors I'm talking about, were keeping their purse strings very tight. And then you talk about, going out and buying all these Christmas presents in July, these 25 million ounces. And then as an investor, we're thinking, okay, how do we monetize these? It takes 3 to 5 years to put an asset into production. So that's sort of like a long way to monetize them, right? Thinking as a shareholder of GoldMining, but a very unique way and a thoughtful way is to create and perhaps spin out a royalty company. We, of course, have seen these royalty companies in the market fetching exorbitant valuations, whether you look at Ely or EMX or the deal in Caldas that was just able to be done and the millions of financing that they were able to get down in Brazil. And so a very smart idea to start a gold royalty company. Tell me about what attracted that to you and why you're so excited about it. I know you haven't given any guidance on Gold Royalty Corp, so we can't speak to that, but talk to me about your plans a little bit.
Yeah, no, my objective is to grow a standalone team to maximize the value of that gold royalty portfolio in whatever form. Eventually, either through an IPO or a spin out, we're going to maximize value for GoldMining Inc. shareholders. GoldMining Inc. right now has a 25 million ounce resource base that's trading at about $12 an ounce, so incredibly cheap. This will afford us an opportunity to crystallize some significant value for those shareholders while creating a standalone vehicle. And if you look at the successful royalty companies that exist today, the Francos, the Wheaton Precious Metals, they were all created out of existing mining companies. Franco out of Newmont, Wheaton Precious Metal out of Gold Corp, my old employer. And in both of those cases, they've eclipsed or come close to eclipsing the market cap of their parent companies. So that early sponsorship, that early foundational element is very, very important to investors. And that's what we have. We have a 25 million ounce resource base underlying that royalty portfolio. And a very diverse portfolio. So that gives us a tremendous competitive advantage. And what we're trying to do is augment that advantage by attracting a very deep management board. And you'll see over the coming weeks and months as we prepare ourselves to be a standalone public vehicle, we'll start to add some very, very high profile mining people on our board and within our management team to augment what I'm bringing to the table and running this organization.
Well, David, I'm always excited to see what Amir comes up with next, whether that's new acquisitions in the bear market that we just came out of, or now what he's going to do now that we have a bull market and 2,000 plus gold prices, especially with Gold Royalty Corp now established, and especially with you now at the helm of that subsidiary. So I look forward to watching you all execute in a gold bull market, and I hope we can catch up again soon once you've had a bit of time to get acclimated to your new role, and once you've had a bit of time to have Gold Royalty under your management.
Well, thanks very much for your time, Nick.
Appreciate it, David. Thank you.